The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 21st. Terrific Thursday edition of today's Trader's Edge show, coming to you live at 8 o'clock in the morning. So, folks, if you are listening to the 1 o'clock show, my apologies. I wanted to get a show in today before I began my travel schedule for the weekend. So we're coming to you live, and I want to absolutely thank you for your presence here today. Now, you can reach out to me for listening in. You can always give us a call at 877-927-6648. And if you can't call in, but you happen to be listening, you can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. Of course, if you're listening to the 1 o'clock show, the normal airing of the Trader's Edge show, and you send a question, I won't be able to get to it today or tomorrow, but I will be back with you at normal programming hours come this Monday. So let's go ahead and take a look at the markets. Let's get things started off right now. You've got NASDAQ futures trading up 3 points. No big deal, 73.16. S&P off 1.5. Russell 2000 is flat. And you've got the Dow equity futures contract trading down 55 points, 24,614. And we're going to start the day looking, we'll look at those equity futures contracts. Look at short-term basis, kind of get a feel for what they're communicating to you and I. U.S. dollar index up 254 ticks. She's trading out at 94.97. Gold is off about 10 bucks, 12.64. We're certainly going to take a look at that. Silver down a nickel. Light sweet crude off about $1. If I take a look at what is going on in the pre-market out here, I don't think my system has properly updated, so we won't do that. When I say pre-market, looking for the stocks that are moving and shaking, so I won't do that. So let's go ahead and begin. Actually, let's begin with gold. And as we take a look at gold out here, trading down about $10, as I say, $12.64. And the first chart that we're going to go ahead and take a look at is just a continuous contract. So what's interesting here is gold likely has further to fall, and we'll go try to identify some price levels. But to get the bigger picture, you and I are just simply starting with the monthly time frame chart out here. And we can see that what gold has been doing ever since it bottomed in 2015, December of 2015, what we can see is that it has made a series on a monthly basis of higher lows out there. And so the question is, and there's also a trend line that has been established. Now, this is a trend line versus a channel line. The difference would be a channel line. I would be looking at either the open or the close, the body of the candle. I wouldn't be looking at the wicks or the upper or lower shadows. In this case here, a trend line, I'm looking at the lower shadow. So you can see that gold is pulling back to a rising trend line. Still has further to go before it touches that level, but all may not be lost with regard to gold's continued move higher since December of 2015 out there, as it just simply. So that's what we're taking a look at there. If we just simply, I'm going to stay with the continuous contract right now, so I don't have to change screens. You'll see the rising on this here, you'll see that monthly rising trend line out there. Now, to give you a price projection of where that would be, it's around the 1250 area out here. Now, what's also interesting about the 1250 area is if we go to the left-hand side of the chart, what you're going to notice is price is moving down into the December 2017 swing point. So that swing point at the bottom is 1238, and at the top is 1247. Seems inevitable that gold is going to go ahead and test at least that 1247 level. I mean, it doesn't have to, but it seems as if that's what it's going to do. Of course, that would spike just slightly below that rising trend line. No big deal. The key is whether or not it closes below that rising trend line. That would then have some other other implications. Those implications being that maybe what we're looking at here, so if you look at the competing patterns, there's a clear potential A to B equals CD to the downside, and maybe this is the pattern that is in play. Now, if we're looking at the daily time frame chart out here, that would give us a price projection of 1244. But the reality is, if that rising monthly trend line gets broken, then I would suggest that 1244, there's no way that that's where gold is going to stop. And the reason is, if we take a look at this A to B equals CD pattern, this lightning bolt pattern, what I want you to really pay attention to and notice, really two things out here. Number one, the retracement was slightly less than a 0.386 retracement. The exact retracement, 36%. The second thing, and more important, or just as important, is the wide-ranging bar coming off of that C point. This is a daily chart that happens to be the session from just a few days ago, June 15th. Today is June 21st. Hey, by the way, happy summer to you out there. And summer solstice, right? That took place a little while ago from an exact standpoint, but we'll call it the entire day. Let's just get back to the chart here, Steve-O. Because of the way that gold came off of that C point, because that it only did a less than a 0.382 retracement, this would turn into more than a 1-to-1 A to B equals CD to downside. Can I guarantee that? No. But that's what I would be looking for. I would be looking for 1200 or 1170. But first things first. And the first thing is gold is likely to head lower. It's likely to test the swing point from back on December the 12th out there, again, between 1238, 1247. At the same time it's doing that, it's going to be testing its monthly rising trend line. And if it breaks through that, you're looking at 1224, 1200, 1170 being those price projections. So that's what we are taking a look at when we take a look at Goldilocks. Now, yesterday's show, as you know, you're listening to either the live show or the tape version, and I love taking calls. I love fielding email questions. There were a couple that came in towards the end of the show. One came in from Robert. I told Robert and Hector that I would go ahead and take a look at their equities, their questions this morning. So let's go ahead and do that. The first question came in from Robert. He was looking for a long trade in a ticker symbol APHQF. I actually don't know what APHQF is. Let's go find out. APHQF. And this is Afria. Afria, I believe, is no idea what they do. We can even check that out. Well, we can check that out. Hey, I'm in control of the show. I think I can actually do what I would like to do. Of course, I want to do what you want to do. But let's go see, what is Afria Inc.? What do these guys do? And, of course, as it goes to show, their description of their business is not in the system. Okay, so maybe I can't tell you what they're going to do. What we can do and what Robert is interested in is what's the stock doing, and Robert is looking for a buy point. Robert, at this stage here, what this is doing is trading in a consolidation range, somewhere between the 750 level, maybe even to as high as 1146. Right now it's about 1029. So you're kind of in the middle. You're kind of in the middle. Is there a reason for you to go ahead and take a long trade today? No. I believe you were looking for a longer term type trade out there. See if this can come down and test those lows again. And what you'd be looking for in the case of Afria, let me get my volume out here. Let me see if I can do that real quickly before we get to this break. What you'd like to do is see this come down into the lows and do with light volume. Maybe like a couple 100,000 shares or so. Yesterday was 1 million shares to the upside. This is Steve Rhodes with TFNN. This is the Trader's Edge Show being taped between 8 and 9 in the morning. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also
also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Trader's Edge Show, the taped version, because it's coming to you live from 8 to 9 in the morning. So if you are listening to the taped version, we'll still make it pertinent to today's trading session. We had a caller, emailer, yesterday or the day before that was taking a look at shorting Micron. In yesterday's radio show, what we said was, no, don't short Micron. There's a sign of strength out here. And that sign of strength came in on May 22nd when there's 111 million shares to the upside. If anything, we said, hey, look, Micron is in a bit of a consolidation pattern. And we suggested that because it wasn't able to take out its highs from March 13, which had 142 million shares. It was tested a couple different times with light volume. So it just didn't have the energy. Will it have the energy today? Came out with earnings last night. It's trading right now in the pre-market at 61.75. Will it hold those gains during the day today? It's up about, $2.50, $3, something like that. Watch the answer to that is going to, so if there's going to be volume and it's going to take out a swing point, in essence, today would really be the day. The high is 64.66. That's the trading session for May 30th. The volume out there was 84 million shares. If Micron can do that, there's really a couple of different A to B equals CD patterns out here. The larger one, and it doesn't have a, we'll see that the price projection is going to be substantially higher than the high from, a week or two ago. It's higher, but not substantially higher. Well, you determine what substantial is. 71.22 would be that A to B equals CD pattern. But, of course, that could be the small one, even though it's larger. And I say small one because there's no reason to think, and I'm not saying that this is what Micron is going to do, but if it does take out the highs from May 30th out here, then it could have a move into 75 to 81 level. It may, in fact, be that Micron, MU is the ticker symbol, is just still going to continue to trade in that consolidation level. And if it is unable to take out the highs out here, again, those highs being 64.66, then what you're looking at is really a consolidation, and it looks just about like this. But is there a reason to short Micron? The answer is no. You had a sign of strength again from May 22nd. Looks like you're going to have another sign of strength today. 1 o'clock, you'll have a better feel for what Micron is, what shareholders are doing, buyers and sellers of ticker symbol MU. Hector wanted to take a look at ticker symbol CRON, Kronos Corp, and his specific question was, what does yesterday's candle session mean? Doesn't mean anything as we speak to me. And this question was really, what does it mean, at least for the next couple of days out here? And Hector, what this is doing, very much like Micron, only this one it's a little bit easier for you to see. It's just trading in, it's consolidating. It's a bullish consolidation that is going on at the moment. We can see a series of higher lows and slightly higher highs out here. In fact, the last high was on June 7th. About 9 million shares, and that was taking on about 2.6 million shares, was also taking a gap to the downside with 3 million. So actually looks pretty good. Now, what is this doing? Right now, just consolidating between the level here of 661 and 771. I don't know if you were looking to get in on this. If I look, that's a daily time frame. If I look at a weekly time frame, this has a bullish structured profile, and what price did this week is tested the 667 level, and if price is able to close above this week, above 754, then what CRON ticker symbol Kronos Group would do on a weekly basis, doesn't tell me when, I know you want the next couple of days, would head up into the 929 level. So that's what I see when I take a look at CRON. Now let's go to the equity futures market. Let's go see what's going on here. And as we take a look at the equity futures market at 8:22 in the morning, the first thing that we're going to notice, speaking of consolidations, and the only way I can speak of a consolidation is to look at the ES Mini. So we take a look at the ES Mini. It's trading in a bullish consolidation as we speak right now. That is between the price level of 27.39, which was tested 2 days ago, the bottom of its TAS market profile, and 27.96. Now, 27.96 is going to be some stiff resistance, or should be stiff resistance. Why? The reason why is because the center of that box, where both buyers and sellers are most prevalent, are comfortable with the transacting prices at 27.83. That's actually been the high, the intraday high so far. And that center line, that center of the box, at 27.83, closer to the top. That says it is a bearish structured box. Now, if price is able to close above 27.96, there's nothing more bullish than a failed bearish pattern. That's what you would have here. The reason we say that is because it is a bearish structured box. If we take a look at the NQ could give a down. You know what I was trying to say. I caught myself. But it could give a hoot about what the ES Mini is doing because it's in its own world. This thing busted above a equalized TAS market profile that had formed over the last 3 trading sessions. I say equalized because the center of the box is pretty much dead center there. And so it was able to take out resistance, 72.99. This morning, all we saw were traders overseas pushing the markets lower, the futures markets lower. It was really just testing the top of that box, 72.99. Now, what happens if the market sells off during the day? Well, watch 72.99. If price can move below 72.99, anticipate a test of 72.33, the center line, and below that 71.68. As we speak at 8:24 in the morning, the NQ is just simply bullish. If you take a look at the Russell 2000, that thing has a mind of its own, and its mind of its own is traders around the globe that trade the Russell 2000 in dollars, that's you, in euros, maybe it's a cousin or a friend that you have over in Europe, or pounds, maybe it's somebody over in London that is trading as well, or yen, all the folks over in Japan, they love the Russell 2000. And the reason they love it is because it's breaking out in every major currency. I don't see any resistance. Not when we take a look at the daily time frame chart here for the Russell 2000. We haven't talked about the Dow, but we should. The Dow is the weak link in the chain out here. But the question is, we talked about gold. We looked at a monthly time frame chart. If you look at the Dow equity futures contract, you're going to see since the February 6th low, a series of higher lows. And what you're going to see out here, oh, that's too funny. So I've got my cell phone here so that I can check for emails. It's the easiest way. That is too funny. Yesterday, it came on as well, and I couldn't figure out why did it all of a sudden pick up my voice and come on. And I said a series of higher lows, and that must activate Siri. Too funny out there. Anyways, you'll find that, you know, I'm technically challenged, I think, when it comes to these. I just use this mostly as a tool, but there's probably so much more to learn. But in any event out here, whether Siri thinks the Dow Equity Futures contract is making, yeah, it is spying on me, is making a series of higher lows or not, it is. And that is bullish. So as we take a look at all these charts out here, the equity futures contract, the ES Mini is bullish. It's in a consolidating bull mode between 2739, 2796. The NASDAQ is bullish up above its TAS market profile high. The Dow Equity Futures contract, the weak links, making a series of higher lows out here. And the Russell 2000, it is at the party on every screen of every major currency. The global flow of capital loves our small caps. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we've got a couple of email questions that came in. So let's go to our first one. This one's coming in from Chris F. And Chris says, hi, Steve. Thoughts on the euro? I think we will trade in range from 114 to 117. Thank you. Safe travels. Thanks for that. Much appreciated. So, Chris, what I'm going to first do for you is let's take a look at the bigger picture. So I know you're talking about a range, and I understand why you've come up with that. We're going to take a look at it. But first, what I want to do, especially if you folks are watching us on Tiger TV, and again, this show is being it's live between 8 and 9, so you're going to see the archived, the tape version of that. And I won't be able to be with you tomorrow, but we'll be back on Monday. But Chris, what we're looking at here, the long-term chart for the euro, you can see in a very clear, defined, descending price channel out here. And so maybe it's going to trade in that range, shorter term, or what we can also see that's going on inside of the monthly chart for the euro is it's presently trading right at about, let's call support of its last swing point. That's at 1.15539. That is from the trading month of November 2017. If price closes below that level this month in June, then what we would really be taking a look at is a move down either to the bottom of the price channel, or we have to, our eyes, we don't have to, would either be some type of retracement, but my eyes just simply would go and take a look at January of 2017 as being the level. That would be at $1.03. And that says, hey, time to head to Europe, time to go to Italy and have a good time out there. You know, nothing would be better for us in the U.S. traveling over to Europe than to have the euro in essence right around par out there. So, but on a daily basis, I see what you're looking at, and what you're looking at, what Chris is looking at here, folks, is he's really looking at the same swing point, only on a daily basis. You can see a nice little bullish engulfing candle. So it shows that we've traded into that low. And so that range would be, that he's talking about, is 114. He or she, because Chris could be, so I apologize. But what Chris is looking at here is, we're trading at the lows right now. Would I take a long trade here in testing this? I would not. I would not take a long trade in the euro. Price would have to close above Stevie's red line out here, and that is $1.15, 1.1571. And then you may only get a bounce into about the 1.1639 out there. So, Chris, thanks for writing in. This is what I see when I take a look at the euro. Let's not forget always to try to get the bigger picture to just get a feel for what whatever it is that we're trading is going to do. Tim wants to go take a look at Facebook out here. So let's go take a look at Facebook, see if we can figure out where Facebook is trading right now. And Tim is asking the question, is this a good entry on Facebook? It looked like it may have broken through resistance. So, and it certainly did, well, it did on a monthly basis. It broke above a swing point, so there's no doubt about that. It's at its all-time highs, or near that. If we go back to the daily time frame, by the way, what's it trading at this morning? It's trading at 202.28, closed at 202, so really not much movement out here. The question is, a question that was posed, is this a good entry point? And, if you're going to chase it because it's broken out, then yeah, maybe. We've got to try to figure out what would be the problem in doing that. The first thing we're going to take a look at is, what is the character of Facebook? Meaning, what was the conviction behind buyers as price was passing through 195.32? 195.32 was the high from February 1st. What we need to do is we want to see from a conviction standpoint, it was really what was going on volume-wise, because that would then maybe assist you. And Tim, what you certainly would like to see here, if you're going to chase something, you're going to go with the momentum move, is you'd like to see that level broken with volume. Now, the volume there was 54 million shares. It was passed with 19, then 21, then 16, then 19, and yesterday 28. So in the game of musical chairs, it becomes a bit iffy. Does not mean it won't move higher. But you were asking the question, if you want to play the momentum move out here, where's the momentum move? I would have to say it's Stevie's red line, which is 197.99. And you would have to make the judgment call whether 198 versus the 202, whether that $4 is worth it to you out here. You don't have a confirmed A to B equals CD. We certainly can identify a pattern as such. And we put on the, monthly, no. Let me try the weekly time frame, see if we've got any decent swing points. Here's what I'm going to say. Instead of really the A to B equals CD pattern, if Facebook, regardless of the fact that it broke out on light volume, it really, what I see here is I see this little consolidation. And so what the consolidation offers us, Tim, is a measured move price projection. So from a reward risk standpoint, what you're looking at is about 241, 242 to the upside. And what you just don't want to see this thing do is close back below 195.32. So to summarize it, your better entry point would be about 198. You make the decision whether it's worthwhile to hunker down into it right now and not worry about that. And just don't let it close below 195.32 out there. The average true range on a daily basis, well, that's a weekly basis. The average true range on a daily basis is $3.78. So it's possible to get back to Stevie's red line. Of course, that red line is going to continue to rise, so tomorrow's entry point would be just a tad different. So thanks for writing in. Much appreciated. Always good to go take a look at positions and things that you want to look. We've got a question here from Robert M. And Robert says, went long the Dow, trying to play a bounce. It appears it was early. It's got the average true range and so forth. So, Rob, here's what we've got. And the easiest way, so you're concerned you got into it early out here. You're trying to play a bounce. Here's what's going on a 30-minute basis inside of the Dow Equity Futures contract. It has completed an A to B equals CD. And it did that as price got down to the 24,569 level. You can see that beautiful A to B equals CD. Very normal, the type where you would say, okay, a 1-to-1, this is a 30-minute basis, by the way, where you'd say, okay, a 1-to-1 makes a lot of sense out here. Now, what you like to see in the old buy the D point, which wasn't yesterday, but it is, well, it could have been yesterday. Yeah, 6 o'clock in the morning yesterday, sure. So maybe you weren't early, maybe. So you have the bullish reversal signal. Now, it doesn't show up on my screen as a bullish reversal signal, but it is. Because what my system will pick up is the Three-River Morning Star. And that Three-River Morning Star is based on one of the great warriors in Japan, Oba Nobunaga, on the tip of my. Hey, let's just take a look at the Three-River Morning Star. Now, this is also a pattern that can form over 4 bars or 5 bars. And what we see here is we've got kind of a down thrusting bar. This is at 5:30 yesterday morning. Then we have, in essence, 2 small-bodied candles that were really at or below the price out there, and then a wide-ranging bar to the upside. And that is your morning star pattern. So it says support is going to be the low of that, and that's going to be your low at 5:30 yesterday morning. And that's the price point of 24,557. You don't want to see price get below that area. If it does, then what you've got is a next price projection of 24,507. But right now, the bulls are trying to defend that area, at least on a 30-minute time frame. We'll come back and take a look at the Dow Equity Futures contract. We come back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So if you're listening in on the 1 o'clock show, this is coming to you live from 8 and 9, so you're listening to the archive version. But either way, you're going to be able to get information out of it. Now, at 8:42, we're taking a look at the Dow Equity Futures contract. Robert went into a long position, and the question that he has is, was he early? And we were taking a look at the 30-minute time frame chart showing the nice A to B equals CD. This, too, may be a Gartley buy pattern that is forming. No, it's really not, because it's just retesting a series of lows out here. So, there I go. I should use the word series again, and my phone Siri pops up asking me what to do. I'm gonna have to figure that one out. In any event, out here, so this did form a nice bullish reversal signal. The Four River Star, by the way, was Oda Nobunaga is the great general in Japan, feudal general in Japan that I was thinking of. And so what you want to see is you want to see this level hold. I don't know if it will or won't out there. We just know that here's another bullish pattern that was followed up as the Dow Equity Futures contract back here at around 10:30 in the morning on June 19th. There's your bullish engulfing candle. You've got a couple of other bullish reversal signals. This is back on the 19th as well. So this is or should be a strong level of support. So if it fails, it really is communicating quite a bit to you that we're going to see lower price out there. Now, those 4 river or 5 river morning star patterns, they're very famous out there. You just need to know what you're looking for. When I say famous, if you go back into the March 2009 lows, you're going to see a perfect example of another one of those patterns out there. Many people only look for that 3 river, either morning or evening star pattern out there. What you want to look for are the ones that take a little bit longer to form, such as the March 2009 pattern. It's a very strong pattern, which when it fails, nothing more bearish than a failed bearish pattern. You would need to stay with the third. Oh, my goodness. Stop, Siri. Stop. And here you can see another one that occurred between July the 7th and completed on July 13th back in 2009. That was really the first retracement in that in the bull market that we are still in out there. So, Robert, I hope that helps you out. Now, there's one other thing that I would be looking for, and which I am looking for. Maybe it'll influence you staying in the trade. I don't know. What I'm really looking for those of you that watched yesterday's show, when we summarized yesterday's show, what we said was We were looking for the Dow equity futures contract and likely in the overnight session to push beyond the prior low. And I'm referring to the low from 4 o'clock in the morning on June 19th, 2 days ago. That's what we were looking for. Why were we looking for it? Well, we were looking for it because the same way that the 5-hour time frame chart, that's what we're looking at, made its high, is likely the same way that it's going to go ahead and make its next bottom. We also happen to be in wave number 7. The market likes to sing in the key of G, the Stevie Wonder key of G. A, B, C, D, E, F, G is number 7. Hence, you've got number 7 on my chart. We know that prices, now, this pattern is potentially forming. We have to see the cavalry arrive out here. It doesn't look like they're going to arrive in the next 15 minutes. That means we wouldn't know until 2 o'clock when the normal Trader's Edge show would be over, and I would be able to tell you and share with you whether or not the candle session that just took place between 9 and 2 was a confirmation of that low, Robert. I wish I could, but I won't be here. I'll give you a price level to look at, and that's going to be on the 5-hour time frame chart, Stevie's red line. It's currently priced at about 24,691. You have to use that as a gauge, as an estimate. But if you were to see price close above, let's say 24,691 or thereabouts at 2 o'clock, then you would have your reversal signal. And that would then mean to me the next bottom inside the week indice is actually in, because you have the ES mini in a consolidation, bullish consolidation, the NQ trading above its top of its TAS market profile. The Russell 2000 just has its mind of its own to continue moving higher because money from around the world is flowing into the U.S. It is a fact. So watch the Dow equity futures contract does want to form a bottom, or appears that it wants to be forming a bottom, but is now the moment? I don't know. I won't know until the market tells us. And it'll tell us in a very specific way, and it'll form that pattern that so often is at the bottoms out there. So I hope that helps you out. Ron M. has a question, and Ron is asking, is this a good time to take a long position in the euro short term, and where to put a stop? So we talked about that earlier. Maybe you didn't catch it, but I'll just summarize it. It may be, but maybe not. You know, if you're a risk taker, then yeah, go ahead and put your stop below the low of this morning out here, and that's the low at 530, and you're looking at a low of 1.1507. If you get below that, that would be your stop. As far as a short-term pop, you know, take a look at this wide-ranging bar that took place here at 5 o'clock. This is 5 o'clock on this morning. It's 5 o'clock this morning. Wide-ranging bar. You know you've got a bunch of sellers out there. Now, I don't know if that was because of whatever the Bank of England might have not changing their interest rates. I don't really know what it is. I just know that you've got a wide-ranging bar to the downside. You've got to be careful. If you're asking me where resistance is, it's at the high here of prior to that move to the downside. It's the 430 high, and that's going to be at 1.1568. Do I see a pattern out here that says, hey, this is a good bottom? No. The only thing that we see out here when we take a look at the euro is just simply the mere fact that it's traded back to a prior swing point area. Is this going to hold? I don't know. I don't know. I would say this: if the low of this morning doesn't hold, probably a pretty decent chance that you'd want the other side of the euro trade out there. So we had looked at the monthly, we had looked at a daily, we just looked at a weekly, and then we looked at that 30-minute time frame chart. So on a short-term basis, which in essence is what you were looking for, because you use the word short-term, you know, you've got to make the assessment whether it's worth the risk-reward to go long the euro out there. Your best or better bet, because you're right in the middle of the range, I don't think it's good reward risk, because you've got to put your stop. Well, why am I looking at my screen when you would want to be looking at exactly what it is I'm saying? Your stop here has to be below the low of the morning, and I'm suggesting to you that resistance is in the 115, 1.156. Maybe it's right around 1.157, right around that area. So hopefully that helps you. Hopefully that helps you out. And thanks for writing in. Much appreciated. I see we've got a question inside the den coming from Maria. Sorry, Steve, I'll listen to your show. You are in mute now. Really? I think that This move is a key reversal on the dollar. Moot. I'm in mute? Why? Maybe, oh, you're just putting me in mute so you don't listen to me? Okay, well, no problem. But he was asking about, the question, though, was maybe asking about the U.S. dollar index. Let's take a look at the U.S. dollar index out here. Now, we'll see the 30-minute, but I'm going to put this on a longer-term time frame out here. So if we take a look at the U.S. dollar index, we look at the September contract out here. We're going to have to look at it when we come back from this break. I think it's like the 2-minute roundup that we've got going, but I'll do the best that I can. Hey, folks, thanks for being here. If you listen to the 1 o'clock archive, thanks so much for doing that. I'll be back with you on Monday. No show tomorrow. This is being taped from 8 to 9 in the morning. Steve Rhodes with TFNN. Be right back for the market wrap.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So if you're listening in, this show is being taped between 8 and 9, but thanks for listening. I'll be back with you on Monday just due to my travel schedule. The last two charts we're going to take a look at, there was a question inside the Tiger's Den about, hey, strong dollar or weak dollar, which one is better for, let's say, the market? In this case here, I'm just going to go ahead and take a look at the Dow, and that's what's at the top portion of my screen. The center portion is the U.S. dollar index, which you can see trading out about 94.79. And the bottom portion takes a look at the correlation between the two and looks at an average 20-day period out here, which is a nice smooth type of average out there. When the red bar is above zero, it says there's a directional correlation. When it's below zero, so there's no directional correlation. You can see it's pretty much split. It's sort of 50-50. Maybe it's 55-45 out there. Basically, it's a coin toss. So I don't really think that we can conclude that a strong dollar or weak dollar is better, at least for the Dow out here. What we do know, and what we can conclude with regard to cash, which is really what it's all about, is the following. And Maria's absolutely onto something here, and that is we need to understand how each of the instruments that we trade, doesn't matter what it is, commodities, could be equities, indices around the world, what you want to understand, because money has to go somewhere. It's going to be invested somewhere. It's going to be invested somewhere. The trick is trying to figure out where it's being invested. This is a chart for the Russell 2000. This shows you that it's at new all-time highs in dollars, in euros, in yen, in pounds. It's as simple as that. This is where the money is flowing. Volume or not, it doesn't matter. What matters is where is the cash going? It's going into the Russell, it's going into the NQ, and it will continue going in there, really, until it doesn't. What are you going to be watching for today? The Dow has been the weakest, the Dow Equity Futures Contract. It's in the process of trying to form the same type of bottom on a 5-hour basis as it did up at the highs. At 2 o'clock, we'd know. I won't be with you. My apology for that. But watch for the Dow on a 5-hour time frame. That'll tell us whether its next bottom is in or not. Folks, have a great day. Thanks for joining me live between 8 and 9. If you're listening to the archive show, thanks for doing that as well. And I'll see you come Monday. Take care. Have a great week.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.